Good morning, everyone. This is Amit Pabari, founder and managing director of CR Forex. On our last week video, we suggested that ideally rupee should take support near 85 kind of a level and it should bounce back towards 85.80 to 86.10 kind of a level. Indeed, it took support at 85 kind of a level and moved higher towards 85.60 kind of level. But then all of a sudden, it made a U-turn and rupee appreciated and made a low close to 83.75. This sharp move raises two questions. First question, why did rupee appreciate it so heavily last week? Second, where it is going in coming days. In today's presentation, we are going to answer these two questions. So let me answer the first question. Why did the rupee appreciate? There is a buzz going on in the forex market that US told Asian countries that if you want to make a deal, then appreciate your currency. Yes, you have heard it right. Can a country tell the other country to appreciate its currencies? It has happened in past. For example, in 1985, Plaza Accord happened with US, Japan, West Germany, UK, and France, where other countries agreed that they will make their currency stronger against dollar. It was formally signed. There is also an informal agreement happened in 2017 between US and China. It is not official agreement. There was a buzz. So similar kind of a buzz in the market going on that last week also some kind of a negotiation must have happened, because of which most of the Asian currencies have appreciated last week. US Treasury have indicated three criteria by which they will understand which country is manipulating their currency. So first criteria is a bilateral trade surplus of $15 billion. Second criteria is current account surplus of 3% of their GDP, at least 3% of the GDP. Third, extensive evidence of buying dollars. So basically, Taiwan is the country which meets the first two criteria. So basically, it is the country which will be dictated most. So if you see the table, you will understand that Taiwan currency got appreciated strongly in last 1 week, and other Asian currencies also got stronger. Rupee had performed relatively better as compared to other currencies. So this answers my first question, why rupee appreciated last week. So now let us move to the second question, what lies ahead for rupee in the coming days. So one of the most important event next week is Fed meeting. Entire market is expecting that Fed is not going to cut interest rate in the coming meeting. But the question is what outlook they are going to give about the next event. Generally, market is expecting that Fed will say that they will be under wait and watch mode as inflation expectation in US is higher because of tariff. If they are sounding hawkish, then ideally dollar index can move towards 102 to 102.50. If they are not sounding hawkish or they are sounding neutral, then dollar index will take support near 99 kind of a level. So basically, if dollar index moves higher toward 102.50 kind of a level, or if dollar gets stronger, rupee might get weaker. Now, second important aspect is RBI stance. If you see the table, you will understand that on 14 March, rupee was trading near 87 kind of a level. By 21st March, it went to 85.98. During those time, RBI acquired 1.67 billions worth of foreign currency assets, or you can say it has added reserves. Now again from 85.98, rupee moved to 85.48. During that time, RBI bought 6.07 billion worth of dollar. Now again from 85.48 to rupee went to 85.24. At that point of time, RBI bought reserves worth 9 billion dollars. So if you see the entire table, you will understand that RBI have added reserves close to 23 billion dollars from the period from 14 March to 25th April. This is giving us a clear-cut indication that if the pair is getting stronger, probably RBI going to intervene. And on Friday also, rupee made a low of 83.78, but while closing it moved towards 84.58. There is a buzz in the forex market. Probably in the second half of the day, RBI might have intervened strongly. Second aspect is, apart from buying reserves, RBI's second objective is to create liquidity into the system by doing OMO, which they have been successfully doing it from last 3 months. Now, when they are doing OMO and simultaneously they buy dollars also, it also add liquidity into the system. By doing this, RBI is able to achieve both its objective, building the reserves and adding liquidity to the system. Now let us conclude the view. In the short term, rupee can take support near 83.75 and can gradually move towards 84.80 to 85.20 kind of levels because of two reasons. First, Fed can sound hawkish and dollar index can move towards 102 to 102.50 kind of levels. Second, RBI might intervene at lower levels and give support to the rupee. Although in the short term we are expecting the currency to move up, or we are expecting a dollar index to move higher, but in the long term, as US economy is not performing well, money is going to flow from US economy to emerging and Asian market. If this theme constantly revolves, then there are 80 to 90% probability that all Asian currencies is going to get stronger. So basically the broader view is, any uptick should be used as an opportunity to increase hedge ratio from the exporter side. Now let us discuss strategy for thin margin exporters. Most of the thin margin exporters have taken costing near 85 kind of a level, but most of them might have missed as rupee appreciated strongly. For them, we will suggest that they should keep a stop loss of 84.30 kind of a level, and once rupee reach towards 84.80, that point of time they can hedge 60% of their exports. For remaining, they can target 85 to 85.20. This is for orders which are open. For orders which they are taking on a newer costing, say 84 or 84.20, that they should cover 100% on a back-to-back basis between 84.60 to 84.80 kind of levels. For thick margin exporters, we will suggest that they can keep a stop loss of 84.20 and wait for higher levels of 84.80 to 85.20 kind of levels to increase their hedge ratio. For importers, we will suggest that they should ensure that they are covered for next 45 days. Import payables ideal range for buying is between 84.30 to 84.50. With this, I will end my today's presentation. Jai Hind, Namaskar, फिर मिलेंगे next week. Thank you.